Well, hello and welcome to another video in the series where we take a closer look at aspects of the quantum trading indicators. And in this one, we're going to focus in on the quantum VRSI indicator, which is the volume relative strength indicator. Now, I hope you've seen some of the previous videos I've recorded, the introduction, and also where we've looked at other markets. And in this one, we're going to focus on some ETFs. And really just to show you that the indicator works in exactly the same way, whatever the instrument, whether it's a stock, whether it's an ETF, whether it's a future, a commodity, whatever it is, it will work in precisely the same way. And of course, across all the time frames. And I hope also that you'll watch the longer term video where I recorded it across the daily, weekly, monthly time frame. But here we are back into intraday territory. On the top line, I've got the 5-minute, the 10-minute, and the 15-minute set up. And that's with the indicator itself. So there you see the VRSI indicator on its own. And below that, on the equivalent time frame chart, so exactly the same, I have the volume price analysis chart. Because as I've explained in all the earlier videos, the VRSI indicator is a complementary, it's a sister, it's a supplemental, it's a peeling back of the layers of the volume price analysis methodology, and therefore it's always used in combination with that particular approach. Now you can put the volume at the bottom of your chart and have the VRSI running above it. I've just broken it out here for clarity so that you can see the two in complete isolation. And you'll also see as we walk through these examples how the analysis really mirrors itself across the two, and you'll see why it is that the VRSI is such a powerful indicator. And the word we use to describe it is pressure. Anna and I thought long and hard about the terminology for this indicator, but pressure was the one word we kept coming back to, the one descriptive word that really encapsulates what the indicator is about. It is about the pressure that describes the momentum and the strength of the trend that you are witnessing. It's very graphical, as you can see. It's very straightforward in the analysis, and it's very intuitive as well. So we always use them in combination with, or the two together, the VRSI and our VPA below. In case you've not seen the earlier videos, very quickly, let me give you the key elements, if you will, of the indicator itself, of which there are really three main ones. The first is the fulcrum line here, where we move from, in this case, from bearish to bullish, or from bullish to bearish, whichever it may be. That is obviously a key point at which sentiment has shifted from one to the other. The second aspect are the color changes. And broadly speaking, the darker colors represent strong sentiment. The lighter colors represent less weak sentiment. So for the bullish moves, it is light blue. And for the bearish moves, it is salmon pink. But you can, of course, change these accordingly to whatever color you prefer. The third element, and the crucial element to the indicator, is the height of the pressure bar. And this is really where we mirror the analysis that we undertake when we're looking at a VPA chart. The taller that bar, then the greater the pressure. That's the first sign. The second is where the pressure is maintained. In other words, where we see a group of candles in a trend and the height of those bars is being maintained. In other words, confirming to us that whilst the color may have shifted from a darker to a lighter phase, the sentiment remains pretty firm for that particular trend at that point. And the other aspect to it is also benchmarking, where we look at the height of that pressure bar in comparison to one either preceding it or one which follows it. Now, all of that sort of analysis, and in addition to that, we also look at how the combination of heights rises or falls with a trend. So in a rising trend, just as we want to see rising volume, so indeed we want to see rising pressure bars in precisely the same way. And equally, in a bearish trend, we also want to see rising pressure because it takes effort to fall in the same way that it does to rise. And that analytical approach is precisely the same whether we're looking at a VPA chart or whether we're looking at a VRSI chart. So you can start to see the overlap and the commonality between the two approaches and why they marry together so well and why we developed it. Now, there's one other aspect I want to talk about here, which is very much to do with multiple timeframes. Multiple timeframes are a key element, whatever it is we're doing, whether we're trading or whether we're investing. Looking at our time window across our chosen time horizon and split up into generally 3 charts, maybe even more, really gives us that perspective. It tells us what's happening in our fastest chart, and if that trend or reversal has some momentum to it and has some strength to it, some pressure to it, then ultimately it will move from our fastest time frame through to our central time frame and ultimately out to our slowest time frame. There are many different analogies that we've used over the years. One is throwing a pebble into a pond where the ripples move out to the edges of the pond. It is very similar to that. It's like an incoming wave. It has a relentless momentum to it, and if that momentum moves across the time horizons, then that trend is going to be extended. It has strength. It has pressure, in other words. And the other analogy that I've used a great deal when we're trading is to consider these 3 time horizons as if you're driving a car on a 3-lane highway. You're driving in the central lane. You've got faster traffic on your left-hand side and you've got slower traffic on your right-hand side. And what you're witnessing on your left-hand side, your faster time frame, in other words, your faster lane, is what is going on down there, because that's where a change will happen first. That is where you will start to see changes in color, changes in height, changes in strength. And if that moves across your time horizons through into your trading window, let's say your central lane, and ultimately through to your slower lane on the outside on your right-hand side, then that trend has strength and you'll see it migrate through your 3 chosen time frames. So the fast time frame is crucial, whatever it is you're doing, because that is where you will see changes first. And if they migrate through into your middle time frame, then clearly that change, that reversal, that trend, that change, that increase in momentum, whatever it may be, a breakaway from congestion, that clearly has some momentum because it's now moved from your 5-minute, as we are here, up onto our 10-minute, into our central time frame, and out the other side into our 15-minute. And in a way, you can see that happening here. And I'm going to look at 4 ETFs here, all of which I'm sure are very familiar, and this one probably more than any. This is the SPY. Then I'm going to look at GLD. I've got XLK and XLU. We'll take a look at those as well. But if we start with the SPY, which is the most heavily traded. So let's see what the SPY's been doing today. As I say, at the bottom there, you've got the VPA equivalent. So I'm not going to spend a great deal of time on those because I've done so many examples over the years, and so has Anna, on VPA methodology and analysis, and also in the program, there's a lot of examples. I really want to focus on the top line. But if I see anything that ties into the conversation, then obviously I'll pull that up for you. So if we click on the first one, and we'll go up onto our 5-minute, which is top left. Let's just pull this down into view, make it a little bit easier. There we go. There we are, that's that. And we'll just pull this down. We've had, as you can see, quite a bit of bearish sentiment. So there we go. Now we've got it all in focus. Okay. So what's the story of the day? Well, it's pretty clear from this chart what's been happening for the SPY today. I haven't got the extended trading hours on here. And again, I've taken those off just for clarity. It's very easy to put on. I've shown you in an earlier video how to do that, but it's very easy. You just go into settings and you choose extended hours or not. I'm on regular trading hours, RTH, which is down at the bottom right there. So the story of the day here is we had a gap down open. That bearish sentiment continued for some time, for a couple of hours. And just to frame this for you, it's currently just gone 7:30 here, UK time. So we've been running from 2:30, which is when the market's open for us. So we're about 5 hours into the session. So there's about an hour and a half left to go to the close of the day. So that's roughly where we are, to put it into context for you. So as you can see, we had a gap down, bearish, and we had this bearish trend develop, and then it starts to weaken, and we've now had this gentle recovery in terms of bullish sentiment. So how is that all described by the VRSI indicator in terms of pressure? And really, this defines it very well and describes it very well. The initial gap down, as you would expect, we get a pressure driving that we see follow through there in this phase of price action, the first 4 candles here, further pressure developing there. And throughout this period, you can see what I mean about the height of the candles. These are very tall, signifying that the bearish pressure is being maintained. And even where we see this congestion phase, there's a little attempt to rally come into play. We do see a decline in the height of those bars, but nevertheless, they are still well above our fulcrum point. So really giving us confidence and telling us very clearly that, yes, we are seeing a minor pullback, but really that's probably all it is. And the next injection of pressure, which would be volume, is also confirming that for us. And we continue on with that very bearish sentiment. We get the darker color, which is what we expect to see. It's punctuated with the lighter colors as we see minor pullbacks, minor pauses, etc. And it's only when we see the bars here eventually subside and we move back to our fulcrum, very close to our fulcrum, down to 0. And at this point, we then see the first crossover take place and a tiny sense that perhaps we are starting to see some bullish sentiment now take hold. So this is a very classic example of a reversal from bearish, in this case, to bullish. But the other thing I want you to note about this chart is perhaps not so obvious, but it is once you start using the indicator, in that what you will find is that the height of these pressure bars will describe very clearly the strength of the trend. And by that I mean the angle of slope of any trend. If you have a steeply sloping trend, as we have here, which is coming down at well over 45 degrees, you will see that we have a lot of pressure in that trend. In other words, it has a lot of momentum driving it. So it is a strong trend. And that relationship holds good all the time. So almost without looking at the chart, if you look at the how the pressure bars are described in terms of their height, that will tell you almost instantly the strength of that trend. Whether it's the downside or the upside, doesn't matter. It's the speed with which that trend is moving, whether it has momentum, and how the angle of inclination in terms of the chart. So if it's steeply upwards or steeply downwards, the pressure bars will be tall, signaling to you that this move has volume, it has pressure, it's moving fast. Now, there's no guarantee that it will obviously continue moving fast, and you've got to look at your VPA analysis as well for when stopping volume comes in and all the rest of it. But what the VRSI indicator will also show you is when that is coming to a pause point, because the bars will be of less tall size. And gradually, of course, we will come down to a point here where we come back down to the fulcrum point as that pressure ultimately wanes, because no trend lasts forever. Whether it's up or down, it will always come to an exhaustion point somewhere, and then you will ultimately see congestion often develop, and then a gentle or maybe not so gentle reversal. Now, if you look to the right-hand side here, this is our bullish trend. It is a trend. No, there's no question it is a trend, but it is not a strong trend. How do we know it's not a strong trend? Well, clearly we know it from the price chart, because these candles are not rising very steeply. It's a gentle rise. It's a gentle rally. The angle here is, I don't know, 15 degrees maybe, perhaps not even that. It is very gentle. There is no accelerating, there are no accelerating moves here in terms of widespread candles or rapid move. This is just a very gentle, even-paced recovery off the lows of that bearish move. And that is mirrored by the height of the pressure bars here. You can see they are not very tall. They are remaining blue for the time being. We're oscillating between dark blue and light blue. So they are continuing to signal that, yes, we have got a bullish tone to this recovery. A little bit of a punctuation here in a darker color. So it's telling us we've got a little bit more pressure coming in there because the height of that bar is the highest one so far. But you can also see that has really not followed through here. And as I'm talking, watching what's going on, we've gone into congestion here. We've got 3 or 4 where the color has changed to a lighter color. So sentiment has waned. So that recovery doesn't look particularly strong. And also their height is declining. And it looks as though we're returning once again back to our fulcrum point. So that bullish trend, now it may continue later in the day, but for the time being, it looks pretty weak. And it's really not accelerating very fast. But the point I wanted to make about this was really, it's a very clear example of the relationship between the height of the pressure bar and the strength of the trend. It's very simple. Strong trends will develop strong, tall pressure bars. Weak trends will show very low pressure bars, as you see here. And that's just a descriptive way of looking at a trend and really describing it for you in a very clear and straightforward way. So I'm glad we came to this one first, which has really encapsulated a lot of the things we look at when we're analyzing this with the. I'm just going to put that back so it comes back to a better size on the screen. There we go, and just pull those up too. So there we are. So that's on the 5-minute. And of course, you will see that across, you can see it here without me expanding the charts, but I will anyway. You can see the price action described on our 10-minute. We had the initial surge of pressure, which was maintained for quite a while, and then gradually it starts to diminish. We move back to our fulcrum, and then as the trend gets underway, it's not a strong trend, and therefore the pressure bars here are not particularly high. But it's moving in much the same way as we saw on the 5-minute. And over here on our 15-minute, our slowest time frame of all, the drop away is very clear indeed. It's almost metronomic the way it moves down here. So we see it declining, and ultimately we see just a peek through here into some potentially bullish sentiment, but it really doesn't look terribly strong over on 15 either. So perhaps confirming what we're seeing on 5, that we really don't think this is going very far. And if we just drop down onto the VPA chart for a moment, and just look at what's going on here, we had this injection of volume here under this candle, and really that candle should have gone further than that, but it hasn't. And we've also had volume falling away under the next candle here, as you can see. I'll pop that up full size. There we go. Just pull that down into focus for you. So we had a big injection of volume here, and we should have expected that to see to go some distance further, I think. We then see the volume fall away under the next one. So we've got 2 candles of equal height and size, more or less, and almost exactly the same. And we've got half the volume. So really that's telling you loud and clear that purely based on those 2 candles, there is really a weak follow through here. Sorry, I beg your pardon. I'm looking at these 3 candles, these 3 here. This one in the middle has got a big injection of volume. And then ultimately we come through into the top here. And we get a further trigger of weakness here and into sideways congestion. So it's really looking, it's not necessarily going to roll over, but it certainly doesn't look particularly strong. And that's really how we apply VPA and use it in combination with our VRSI on the top line. Just pull that one open and really just confirms what we've been looking at. This is the session today. This was the session yesterday. And this was the session on the prior day. And really, a lot of the lessons there for you to see, very visual. You can see yesterday, for example, very gentle bullish trend, pretty much what we've got going on today, in fact. And again, you can see by the height of the pressure bars here, really describing that very well. Whether you choose to take part in that trend, that's a personal decision, but it's not giving you a huge amount of confidence. This has a great momentum behind it because the pressure is relatively low. And we're seeing exactly the same sort of thing once again today, relatively low pressure across there as this weak trend tries to rally off the lows, and the same on the 15. We just pop the 15 open. Pull that down into focus. There we go. And really, it describes much the same thing. We had the initial surge in pressure, nicely rising. This is what I mean by rising volume bars, and we've got it here as rising pressure bars rather, and we've got exactly the same thing here. An even better example, actually, the day over on this day, where we had this price waterfall developing. You can see the spreads widening, very, very classical price waterfall. Couldn't draw one better as a schematic, in fact, than that. As we come down to the bottom, and of course, the pressure bars here are stepping up in agreement. So you can think of it in exactly the same way as VPA, where we're looking for price and volume in agreement in a trend. We want to see rising volume and falling price. Exactly what we have here, a nice price waterfall, and we've got our pressure rising as well. And then we get down to the bottom here, and the strength of those bars is still being maintained, even though we're coming to a pause point here. We're still bearish, and we get another leg down here as well, just to finish off on that particular session. So all the lessons here, we see a mini version of that, if you like, rising pressure here on the trend today, and then it starts to deflate and move down to our fulcrum, and we're in this congestion phase of very mildly bullish sentiment right now. So just straighten those up again. There we go. And do the same with that one. There we are. Right. So that's the SPY. Now let's move on to the next one, which is another very popular one, which is GLD. Let's see what's going on in that market, which of course is the Gold Trust. Let's click on that. And instantly, with 3 charts up, you can see straight away what's been going on just purely from the color and from the way the pressure bars are shaping up, their construction. So without further ado, let's start on the 5-minute. But you can see here from the 15-minute, this is pretty much what we've got going on. A big gap down, and the pressure is declining. But let's go over to the 5-minute and see where we are there. Pull that down into focus. There we are. So we've had a big gap down, as I say, and a lot of pressure you can see here. There we go. And really very little in the way. You can see how all this these bars up here, these pressure bars in the previous day have really been compressed, and they've been compressed by this price action here where it's really taken hold. We've had a big gap move down to the open. No surprise to see a lot of pressure there. But what's interesting in this case is there is no follow through. There is no maintenance of that bearish pressure. It almost immediately starts to, well, first of all, we get a color shift, which is fine. We go to a weak color, which is fine. We go to salmon pink. And then almost immediately in this congestion phase, we don't see any follow through. We don't see any taller bars than this one or equivalent to this one. They're not maintaining their height through here. They are literally draining away. And that tells us loud and clear that the gap down here really had no follow through. It had no bearish pressure to drive it lower. And therefore, what we're seeing here is really a recovery from that position and a move higher. And to be honest, when you look at the candles here, the initial one, a deep hammer candle here, and you've got a follow through, another deep hammer candle there. And if those are associated with high volume, then you can be assured that there was a degree of buying there. How far that goes, that's obviously down to what happens thereafter. We've got a minor two-bar reversal here. We've got a major 2-bar reversal here up at the top. So that would have told you pretty much loud and clear that this market probably wasn't going to go too far on this rally. And indeed, we never even got back to the bullish side of the fulcrum. We just stayed below it all the time. So in a way, what this is telling you is, yes, by all means, the bearish sentiment is draining. It's not as strong as it was at the open. It's falling away all the time. And now we're leveling out, but it's weakening, but maintaining this side of the fulcrum. So we are still in bullish phase. And indeed, we don't see a bullish candle at all, I don't think. No, we just make that a little bit larger. There is no... We haven't migrated across the fulcrum, even on these rallies, and even here, rallying back. But then you've also got to look at how far that price spread is. And we've gone here from, where are we? 178.60 up to 179 spot 20. So only $60 an ounce there. So it's not a huge move. It's relatively contained, this price action. So we are, although it looks probably a little bit more dramatic on the chart because I've widened it out like that, when you actually look at it in terms of the price of the ETF itself, this is really in a congestion phase for the time being, and that's why we're seeing these very compressed pressure bars at the moment, where really very little is happening. And this again is another facet of the indicator, because when we are in congestion, let's pop the 10-minute up, see where we are there, very much the same. Pull that down there. So we had the high pressure, and as you can see again, we've not gone through at all into bullish. So really the 10-minute is also confirming that sentiment, because when we look at multiple time frames, and I noted I highlighted the 2-bar reversal for you, well, that was on 5 minutes. And if you overlay one on the other, this is what you've got. You've got a shooting star candle at the top of a little mini rally. So this hardly looks strong. And if you've got volume being driven into that candle, then guess what? The market is at the least not strong and going to go into congestion and may well reverse. Not a big reversal, I grant you, but the principles are identical. So it's really signaling at that point, the 10-minute, that yes, okay, we've seen a fall away in the sentiment, it's weakening, but it's really still being maintained by a decent height on these candles. So yeah, we're still in bearish territory here, and indeed this candle, this pressure bar here confirms that once more. And although the pressure bars are declining very slowly, they're sliding down. They're not moving down. They're just sliding back a little bit. It really is still sending out a message that the bearish element to the ETF is still pretty much in play. We're not seeing any strong bullish sentiment take hold right now. And of course, we'd be looking at lots of other things, not least, of course, what's going on in terms of the dollar and risk and everything else. Let's hop up onto 15, but you can see from the chart there that it's a very, very similar sentiment. If I just pull that down a little bit, there we go. And you can see over here on a previous day, this is what we're seeing today. So we've looked at that on the other time frames. And this is what we saw the other day, where we had the opposite, if you like. We had an injection with our first candle of the session, or first pressure bar of the session, a big injection there, dark blue, so all looks positive and rosy on the first 15 minutes. But there is absolutely no follow through to that initial injection. And let's face it, that's what you see 9 times out of 10 at the start of any session. As the cash markets open up alongside Globex and all the rest of it, in comes the massive surge in volume, which overwhelms the market in a way. It's like a series of tidal waves coming in one after the other in the first 15 or 20 minutes. We get huge volatility and huge volume inrush on all markets, and then it starts to settle as we move into the trading day. And what this was telling you absolutely loud and clear was that sentiment was not going to follow through. We are just going to subside all the way back down through the session and ultimately move at the end or halfway through it into this bearish phase of price action. So the initial injection on the first 15 minutes was just that. It was a one-off. It was a one-trick pony, if you like. And then we slide all the way back down into this bearish phase, which does indeed take it takes up some accelerating pressure here, which is why you see a step up in the height of the pressure bar at that point. And remember also, if I scroll this out to the left, I've shown you this on other charts as well. It moves the larger charts out of the way, and it will help to describe things more clearly. We do it on volume all the time as well, to move those volume bars at the start of a session, for example, move them out to the left of the screen, expand the screen up, and then you'll be able to see much more clearly in focus and in terms of analysis what it is you're looking at. So that was on the 5 minutes. Let's just put that back to a sensible size. There we are. So it looks nice on the screen. This is on 10, but I can assure you it's very much the same story here. And there we are. just staying with the price action where we are. We're moving along, but really draining away, and to be honest, not going anywhere fast at the moment on that time frame, or indeed up onto 15, where it describes it in exactly the same way, and also this one that I referenced earlier on for you as well just now. So there we are. That's what we're seeing, and that's pretty much what we saw just by a quick glance at our 3 timeframes. And of course, all of that will be confirmed with the volume price analysis. And indeed, as you can see, instantly with volume, you pick out the high volume bars, the low volume bars. They just stand out instantly, and they're the first thing that draws your eye, particularly the tall volume bars as they are here. So that was GLD. Let's look at XLK, which I'm sure you're all familiar with, which is the technology sector. Let's see what's going on here. A little bit more movement here. Let's start with the 5-minute up at the top left. Got a bit of injection of volume here. We had some injection of volume here as well, as you can see on the VPA charts, but let's stay with the VRSI chart. Let's pop that open and let's just pull that down. There we go. And let's move this up so we've got everything in focus, because we've got some pretty tall bars down here, as you can see. Right, now we've got it all in focus. Gives you an idea. Okay, well, this is interesting because here we had an initial open of a gap down, fine, lots of pressure associated with that, and then that follows through. And unlike our bullish trend we were looking at just now, where there was no follow through, here there is. And there's follow through in 2 different ways. First of all, we see the follow through in terms of the height of this bar being maintained, and the following 2 bars increasing beyond that, so really confirming the strength of the bullish sentiment at that point. And they're also dark red, of course, which confirms it doubly. Secondly, as we start to move into the session, these are declining, but they're not declining rapidly, and we're certainly not going back down to the fulcrum with any great velocity. So again, it's telling us that yes, okay, we had this big initial injection here to be accepted as part and parcel of the open of the session, of course. But then as we start to flatten out into the session, we've got more injections of pressure here, which is really nice to see. And they are maintaining height. So they're telling us, yeah, don't worry, the trend is still holding good. And it's really only when we start to move deeper down that we begin to approach our fulcrum point. And at that stage, we begin to see some suggestions that we might be moving into a bullish phase rather in due course. But even throughout that phase of price action, and this is what you will see in congestion all the time, narrow candles, which is what you expect to see on the price chart, no great widespread candles there. They will all be narrow, quite small, little dojis, whatever they may be, little squash candles. The volume will be very flat and low, and the same will apply to the pressure bars as well. They will be flat like this, and they will be low. It is a little bit compressed because we've got tall bars over here, but nevertheless, these are not terribly tall. And that's what you expect to see. Then, rather like the SPY, I think, we see the change in trend, but that trend is relatively weak. It's rising, but it's not rising with any great momentum, no great strength. It's rising at a shallow angle to the horizontal. So again, not a trend that's strong, nevertheless a trend. It's a bullish trend. It is moving. It's trying to recover from the start of the day. Whether it does or not, we will see. We had a little injection of volume here in terms of our pressure bar. The highest, I think, just eyeballing it of this phase. So that might be giving us a little bit of encouragement. And then, of course, you're looking at other things. You're looking at the recovery of this point, the open of the day. How significant is that? You're looking at breaking above levels through here, for example, which then becomes support on this time frame, and so on and so forth. So you start to pull together all the other elements that are so familiar to us as part and parcel of volume price analysis. So another nice example here, which is drawing together the threads of everything, and I hope putting this into the context of reading it with volume price analysis. We just drop that out of the way. And as you can see down on the volume chart here, you can see the injection of volume that we had under that particular candle. It looks pretty much okay. We've got a nice widespread candle. We've got decent volume under there. So volume and price are in agreement. Very simple, VPA 101. So that looks okay for the time being. A little bit of a wick to the top of the body there, which is we don't really want to see. But nevertheless, it looks okay. And it'll be interesting to see how this develops in due course. We hop up onto the 10-minute in the center. Pull that into focus. There we are. And really that just mirrors what we're seeing. The bearish momentum here was very much maintained by this height. Yes, it's declined, but it hasn't declined rapidly. Still being maintained here, more injection here, and it's only when we get close down to the fulcrum that we begin to see the first hints of a potential reversal into an uptrend. Very much the same as the 5-minute, but just describing it over a slower time frame. And of course, when we move to our 15, that taking hold aspect of potentially bullish sentiment has really only just migrated and just reached this time frame. And that's an aspect of time horizons that you have to accept and it's part and parcel, because what you are doing on your 15-minute chart, for example, and perhaps looking at this as a potential opportunity for taking on a bullish trade, down on a 1-minute chart, there will be traders who've already done and dusted. They've been in and out. They've taken their money in and out of this candle, or perhaps a little bit earlier on. That's it, and that's the difference. And that's why across the time horizons, you can have one person who is short and one person who is long, and both those people can make money on the market, but they will both have different perspectives on what they are trying to do. It's the wheels within wheels. It's the Russian dolls, if you've seen those Russian dolls, and it just describes it very well, that it's this, the whole market is constructed of a myriad of wheels all moving at different pace, and it really depends what it is you are trying to do as to whether you make money in your chosen time horizon as opposed to what someone else does in a faster or slower time horizon. And that's what it comes down to, and that's why we use multiple time frames all the while, to help us focus in on really what it is, what we are trying to do, and not get diverted by other aspects, because it's very easy to open. We've all done it, let's be honest. You open a position in one time frame and it doesn't quite work out, so you go off to a much slower chart and think, oh well, actually if I leave it on, it'll probably work out in due course. So what was a scalping position then becomes a long-term investment. I use that as an extreme example, but I'm sure you gather the principle. We've all been there. We all go in with one blinkered view of what we're trying to do, and because it doesn't quite pan out in the right way, we then look for an alternative to recover the situation. Say, oh well, actually, okay, let's look at the daily, let's look at the weekly, and oh, we're okay there, so we'll just leave it for the time being. We've all been there, let's be honest. It's part and parcel of learning, and it is very easy to slide into that all the time and to try and correct a trade that's gone not particularly in the right way. And another analogy, forgive me, that I also use a great deal in webinars is of a blinkered horse, where some horses are blinkered on the racetrack, and they're blinkered because it helps them to focus on the finishing line rather than get distracted with the other animals around them. And it's exactly the same here. We have to kind of take this blinkered approach and just focus on what we're trying to do and not get diverted and look at all the other charts. Sorry, I digress there. I didn't mean to go off down that track. So where are we? That's on the 15. So that's on that one, and that's on the XLK. And finally, let's just finish off with one more. Let's go to the XLU, which you may or may not be familiar with, but this is the utilities. And of course, utilities are very much a defensive type of sector, defensive stocks, generally dividend paying, and certainly ones that you would have as a sort of dead weight, anchor weight, if you like, within any portfolio, because they are going to weather any storms, economic storms or anything else, financial storms, whatever it may be. they will certainly be part and parcel of any portfolio that you may have or develop in the future. Just trying to resize this a little bit, just make it look a little more attractive and get everything into focus, because again, we've got some quite big down pressure bars. There we go. That looks pretty good now. As I say, we're on 5 minutes, and this is the XLU utilities. And again, a very nice example of lots of lessons that we're learning here. But I think the takeaway from all of this is it doesn't really matter what's at the top of the chart, whatever the ticker is, whether it's an ETF as here, whether it's an index future, whether it's gold, whether it's oil, whether it's another soft commodity, whether it's a stock, it really makes no difference whatsoever. The indicator works in precisely the same way. This is a nice example to the downside of what I was talking about earlier about the trend, because where you get a trend such as this, which is very strong, it's angled roughly 45 degrees on the chart, so it's really got some legs, some momentum to it. And that's described for you by the height of these pressure bars here. And that's really what it's telling you loud and clear. It's saying, yes, this trend has got pressure behind it. It has momentum to it. It's going to go for some distance. And even when we get reversals such as here into green, the attempts to rally, we don't get anywhere near our fulcrum point. Yes, there is a decline, but it's immediately stuffed out by this next one, which comes in bang, and we get a much higher pressure injected and obviously a changing color as well. And that's followed through on the next one, which is even taller. So again, it's giving us great confidence to hold. And really, that goes back to what I said in the introduction to this video. It really is about confidence building this business. And all the indicators we develop, whether it's this one, the VRSI, or the trend monitor, the trends, whatever it is, where you're looking at holding a position in a trend, you need some assistance. You need help to manage that emotion, which is inevitable. When you see areas like this, you start to see the market come back. Maybe you've jumped in here under this, below this, as we broke away from congestion here. You've jumped in, you're a breakout trader, you've jumped in and you get down to this point and you're banking your profits. You've already got down here and looking at it, hoping it's just going to collapse. And of course it doesn't. It starts to reverse against you, in which case you start to panic, emotion sets in, and the chances are you would close out. And using this in multiple time frames, it will help manage that emotion, because it's telling you here, for example, don't do that. This is bearish pressure is being maintained. I know we've got a little green candle and we get a little one here as well, but bearish pressure is still being maintained in this trend. And then as it descends further, you would be enormously grateful and breathe a sigh of relief. It's not easy. Nobody says it is. It's the hardest thing to do in trading. But that's this is another way of looking at the indicator in this way. And as it's developed, we developed it with that in the back of our minds as well, to give you this graphical representation of help and assistance in managing emotion, describing the pressure in the trend, and therefore helping you to stay in the trend for as long as possible. And even when we get down here where we get the reversal, we do come back relatively close to the fulcrum, but we get further punctuated pressure bars here, which really confirm that we're still not done. And it's only when we get back to the fulcrum here and start to transition through into our darker blue, and we get a nice little upswing here with 4 bars and rising pressure here, and that confirms that we're into some bullish territory here, which doesn't go a great deal further. We start to see it slide away back down here, and now we're into a very gently rising bearish, bullish phase of price action, not strong, because the size of the bars here is only half of these, but nevertheless, it is starting to recover the XLU on this particular time frame. But again, it's all about comparing the strength of the trend. This one here, really tall bars. This one here, very short bars. And that's how it's described by virtue of the indicator. So let me just put those back so they don't look quite so distorted there. Let's go up onto 10 for this ETF. There we go. Just pull that down. There we go. And we've got some taller ones there. There we are. And really that describes it, and perhaps just focusing on this very gentle trend which has mildly bullish sentiment attached to it, and you can see the height of those bars really tells you instantly, yes, we are in bullish territory, but we know for a fact, and we would know it from the price chart anyway, and we'd be looking at our volume profiles on our VPA charts as well. We know for a fact this really hasn't got a great deal of momentum to it at this point. And of course, that's reflected on the 15 as well in precisely the same way. There we go. Lots of downside pressure there, as you can see, lots of really, really tall candles going right the way over to the left-hand side of the chart here. We've got enormous ones right down here. And this again gives you a comparative to the strength of the pressure, to the amount of volume that's being injected, because we would have had more volume being injected over here than we have over here. And it's all back to this comparative nature and how this ties back and bringing right the way back to our VPA analysis. It is the commonality, the mirroring, the terms we use, the analysis we use are just common to both, which is why it's a perfect combination for you to use. Whether you choose to have your volume on the same chart or have it below, that's entirely up to you. It takes up more real estate space, of course it does, on the workspace. But for clarity, I thought it would look much, much better on the chart to do it in this way. And I think it does. And I hope you would agree. And I hope that you've enjoyed this particular video. And the takeaway from it is very simple, in that the VRSI indicator works in all time frames, and it works in all markets. So I hope you've enjoyed it. There's lots more to come as always. Thanks for watching. See you soon, and bye for now.